Hi there, Shingirai here again with another update on portfolio performance over the past week. On a one-week basis, 6 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from minus 0.02% for CBAM portfolio number 1 up to 0.74% for CBAM portfolio number 5. We've seen a bit of recovery there for European equities, which were previously unloved due to COVID-related lockdowns, and that would see ASI, European smaller companies, up 1.88% on the week, which was relatively risk on, and you'd see that performance translating in the US markets through Artemis US Extended Alpha up 1.85%, and then also Equity up 1.72% there in India. In terms of detractors from performance, we've seen some weakness in Japanese equities amidst concerns that the economy is reacting sluggishly in a sort of recovery world compared to other developed markets, and that's led the Bank of Japan to be relatively slower in terms of tightening monetary policy or rising interest rates versus other developed market central banks, leading to a weaker yen and therefore weaker Japanese equity markets, down 1.19% on the week. We continue to see some headwinds alongside the USD corporate bonds space, and that would see the Vanguard USD corporate ETF down minus 0.82%, alongside iShares Global Clean Energy down 93 basis points. On a year-to-date basis, 4 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from 2.61% for CBAM 1v2 up to 15.28% for our most aggressive portfolio number 5. In terms of biggest contributors to performance, we do see a continuing headline or storyline here rather, and that would see Equity Indian subcontinent up 44.94%, alongside runaway performance from the US equity markets through the S&P 400 mid cap and S&P 500 large cap, both up more than 25% on a year-to-date basis. In terms of detractors from performance, again, the usual suspects in the fixed income space. You would see Invesco Global Bonds down minus 4.5%, LNG UK Gilts, again due to the long duration of government bonds, down 5.06%. And then finally, due to the risk-on sort of year that we've had, investors not necessarily seeking the safe haven of gold as much as they were in the beginning of the COVID pandemic, and that would see 91 global gold miners down 11.67%.